Hi, so my name is Georg Schattney. I'll be talking about the greening of real assets, green buildings, green infrastructure. I will take a financial view on that. So why do we finance that? How do we finance it? What are the challenges? Why are some of the great players that you've met here still niche players? So where's the big market for green? Or why doesn't it happen? May I ask, is there any finance people here? Any people or any? Are you familiar also a bit like with the European landscape, the regulatory landscape, or rather not? Okay, seems like rather not. Okay, so let's start with something. If we talk about green infrastructure, green real estate, nice, green, but what is green? So where does the idea come from? It's an idea, or sustainability is a quite old idea that comes from the forestry sector. And it was written down for the first time more than 200 years ago in Silvicultura Economica, Carl von Carlowitz. Because Europe has faced a lot of deforestation in the late medieval times. And then we started to reforest. And at a certain point, this person wrote it down, but before we already had on local levels, we had certain regulations. And the idea was why in forestry, because people saw, okay, we are using more forest than we can replant. And at that time, being warm in winter didn't mean we need Putin, it meant we need forests. So that's where it comes from. Important just to know, because all ideas have a history. There is this very important book by Rachel Carson, Silent Spring, that was about the use of pesticides at that time. Then what people say is the most important picture or image in environmental culture. It's Earthrise. It's a photo taken by Apollo 8, 1968. And it was the first time that mankind saw a picture, a color picture of the Earth, and understood how small it is. And then, of course, you have limits to growth, very well known. Then, coming to our modern times, you have the Brundtland Report, Our Common Future. And then it took off 1992, Earth Summit in Rio, with climate change, biodiversity, and what we today know at that time was, I think, Agenda 2000. Today it's the Sustainable Development Goals. So other important points for what I want to discuss a bit with you is the Stern review on the economics of climate change, because I'm coming from finance, and probably less known, the economics of ecosystems and biodiversity by Pavan Sukhdev, because all of that deals with the question, how can we, in a systematic way, deal with green and investing in green. So I say ideas and ideology matter. A person that some of you might like, but most of you probably hate, is Milton Friedman. He's the godfather of neoliberalism, and he said, hey guys, all this ESG, all this green sustainability is complete bullshit. The social responsibility of business is to increase profits, and that's that. Then we have Larry Fink, who says, who suddenly has converted, I don't know how. He is from BlackRock, biggest asset manager in the world. So he's somehow converted in recent years, and now he preaches we focus on sustainability, because we are capitalists and fiduciaries to our clients. And he sees a deeper reason into that. That won't carry far, I think, for him, because there are too many conflicts of interest. Last but not least, and that's, I think, an interesting view, and that's the view of our Minister of the Economy, Robert Habeck. Climate change is a market failure. So from a market capitalistic point of view, it's a failure because we consume common goods like climate, soil, and we don't basically we don't see it in our balance sheet. Yeah, because we take a common good and we privatize the gains. That would be the thing. But anyhow, this macroeconomic view is the basis for the regulation that we see today. So if you see regulation either on national level, international level, European level, they all state, as the economic system we have in the moment is not able to understand the value of climate or other common goods, there's a market failure, and that's why we intervene in that market. So if we look what drives the greening of real estate and also of infrastructure, is it because people like Larry Fink suddenly wake up and say, I'm a good person today, and that's why I put all the levers around and suddenly we send investment into the green markets? No, it's of course mostly it's future-proofing. It's either regulation or anticipating regulation, and in that respect, it's basically risk management. Yeah. Then there's certainly, for everybody involved, you think you might have better access to capital. Doing the right thing, as you see, is a bit more like seen soft, and we haven't seen a lot of client demand or increasing yields. What does it mean? If today you invest, you don't have a greenium. You don't have a higher performance because you invest in green. And I can tell you, for example, right now we have a problem. A lot of people have invested in green funds. And the green funds are invested in green companies. And these green funds underperform in comparison to, say, bad funds. Why? Because bad funds or brown funds also include Exxon, Saudi Aramco, and these companies are very profitable because of the war. Yeah. So there is let's say there are a lot of people that want to do the right thing. It's not so easy to do the right thing, and there might even be, so to say, a downside if you invest that way. But I think this point 4 is changing because of regulation. So client demand gets higher and will be a massive driver, but it's not driven by any kind of deeper change, but it's driven by massive regulation. So, and that is what's hitting us. These are thousands and thousands of pages of regulation in Europe, but there are also SEC rules. So the US regulator of the financial markets there is very powerful. Securities Exchange Commission. This is happening not only in Europe, it's partially happening all over the world. And what does it mean? It means that we define, EU taxonomy defines basically what is a sustainable economic activity. For example, if you put solar power on your roof, that is an activity which is considered to be sustainable. And that's something you need to be transparent about it. But it's very complex. You will see that more and more. Yeah. Then you have this Sustainable Finance Disclosure Regulation. Also, you will see that if anybody of you has any mutual fund by DECA, Union Investment, Fidelity, whatever. All of that will have to apply taxonomy and this regulation. So, and that means we cannot just pretend we are green. We need to show we are green. We need to report on that. And that's really driving a lot of change. Then you see a lot of other things that are happening. This is really, I can only assure you, massive. And I don't know whether you're aware of that, but there actually, police came searching the headquarters of Germany's biggest investment manager, DWS. And SEC is also in the US investigating Goldman Sachs. So they're really showing we are after you. If you do greenwashing, we come after you. Yeah. And the CEO of this biggest German asset manager, DWS, had to step down. So there is some change. And let's say, I think it's partially good change, but for everybody who is trying to implement these regulations, part of that is problematic if you get deeper into it. Yeah, this shouldn't be the topic here because we would need to talk hours about that and how it systemically affects the way that, let's say, companies like ours invest money. So these rules create massive challenges. One of the biggest challenge for everybody, not only for real estate or infrastructure, is data. how do we know, and we come back to what is green, how do we know something is green? Now, thankfully, EU has given us a bit of a hint with the EU taxonomy, but it's still not so easy. Yeah. So, for example, take Volkswagen after the Dieselgate. So Volkswagen was still bad, so to say, with the old combustion engine, but Volkswagen then said, we are going the other way. We are investing billions and billions to go electric. So how do you, if you invest in a company that's still in the old world but wants to get in the new world, transition, yeah, and stuff like that. So in real life, it's really difficult, and and I will show you then how this plays out in real life. So you say, it's not so easy to get that data, and the data is not standardized. So it's very difficult. It's really difficult. The sheer quantity of this legislation is impressive. I'm let's say in this field for more than 20 years, and that's really a rush. That's a lot. And even supervisors, so the people that supervise us, really don't know how to deal with some of these things. And we are still lacking, so to say, common definitions. I think, and I'll show you later on, we can also discuss it here. I think most people don't have a clue what kind of challenge we are facing, for example, in real estate. Real estate produces 34% of emissions in Europe. And only 5% maybe of the houses you see out there are in a 1.5 degree scenario, which is the scenario set out by the Paris Agreement. So we would need to increase our energetic refurbishment rate from 1% to 2 or 3% to meet the goals that the German government has. But we don't have the capacity. Where do you find the people like him here who can say, okay, George, or okay, dear SME, Mittelstand, I tell you how to do it. We would need thousands of him. Thousands. There should be an army of it. Buses, train loads. No, I'm not exaggerating. Yeah, where do we get all the material we might need for the facades? Where do we get the capacitated people that not only can fix whatever your toilet when it's running, but they can fix your building management system, which is more sophisticated? Where do we get these people? Yeah, we don't know. How would Frankfurt look like, or your city where you come from? Just look down the street, think 95 of 100 buildings need to be touched. Somebody needs to go there, see what there is, because we don't have the data, and say, oh, we put in Schneider Electric, Siemens, Bosch, whatever, as a building management system. We fix the windows, we fix the facade, we change the heating, we connect to district heating. This is massive. This is massive. It's billions. Yeah, it's billions. I think this money, so say, we are stupid in financial markets. So if we can make a buck, we'll always do it. But of course, if Habeck then says we don't give you KfW whatever thing anymore, we go away. Yeah, money is always stupid. But we understand if we can make a buck normally. So there's a massive problem. And as you see, data is always a problem. And last but not least, there's no coherency at this moment between all the regulation you saw. So even EU regulation partially, wouldn't say contradicts itself, but it's very complex. And all of you, if you're with DECA, Union Investment, or whomsoever, should have received already a little information about how they deal with your sustainability preferences as an investor. In my case, that was something like this with a font size 5. Even with this here, I cannot read 5. I don't know, I need a microfiche thing to read it, and you need a lawyer to understand what they tell you. So also kind of missed opportunity, probably, partially at least. Now I said the downside is we are dealing with this massive problems. The upside is even we stupid investors have understood, or part of us have understood, that the times are changing. And pension funds and everybody who's regulated now says, hey, we have a net zero commitment for 2050, so we line up with Paris. We might have science-based targets. We have maybe an individual decarbonization path, how we want to do that. That's all good. So this is changing, and there's definitely demand until you show them how this is going to affect the profitability, for example, of this hotel. If we take this hotel, it's a nice hotel, but probably it's not compatible with the decarbonization path that we need. And then we say, yeah, okay, good, we get in here. Maybe we have all the people and all the material. And then they say, yeah, George, but then we need to sell these rooms. We need to let them for 200 euro, and nobody will come and nobody will have a conference here. So there's a whole suite of questions down the road. Yeah, if we do that. But there is some demand, and I would say this is good because it's really for the first time that you talk to investors, and ESG or green is not just a fig leaf. It's getting real. Yeah. So how do we implement ESG? So this is how our investment process is changing. What do we do? So we have research and we think, okay, how will people live in the future? Will you still go to office? Is it good to invest in office buildings? Will you still be going to shopping centers? Or shouldn't we invest in shopping centers, but we invest into logistics? Because you buy everything on the internet and Amazon and whatever. So you do the research, and of course we check out also with ESG what is, so you say, interesting in this respect. For example, I just said we need to change all of that, so manage to green could be interesting. Yeah, let's say a fund that focuses on hotels and how do we get them from today's status of being brownish to green, or stuff like that. You have the investment strategy. That's something you already find then in the prospectus if you read in your fund. Yeah, it has to be stated already. So we need to talk to you, so say always about your preferences, that's clear. But we need to be clear also what we are following. It's SFDR, but we need to be very clear what kind of goals we have with our investment, even if it's not our main goal to be green, but if it's just part of what we are doing. And we need to tell you how we measure that, how often we inform you about that, how we manage the data, how we govern the product, etc., etc. Yeah. And of course, we need to make sure that our top managers have this information when they take the decision about an investment or not. In the fund management, of course, there's also a question, can we use green bonds? Yeah, green bonds is a very interesting growing market. And what access do we have to such instruments, so to say? And sometimes your, let's say, the interest you pay for a green bond is lower. They're a bit lower than what you pay for a brown bond. There's a little incentive. Yeah, for example, if you go to Berlin Hip, they do such things. Of course, there's an ESG-DD. I will show you what we do. Yeah, not only on a high level. This ESG-DD today can be up to 100 criteria for this building, including how is there public transport that comes here? Can you charge your bike or your car, etc., etc. If it's residential, is there kindergarten close? Is there school close, etc., etc. Yeah. So that's what you can do. The most important point I will show you is the CRAM tool. And if I show you the CRAM tool, you will understand how the regulator and, so say, the lawmaker drives this whole process. And last but not least, of course, we have reporting standards, which are quite sophisticated. We can benchmark. So we have data systems where I can show you this hotel in comparison to other hotels in Frankfurt or to similar hotels built in whatever 80s, compares like that. Yeah, so we're getting better at it. So what does it mean? This is for real, so you say this is first page. It's not made so you can read it. You could. It's open in the. It's public. Yeah. So, but anyhow, you have then you have a sophisticated policy, and there you write it all down. And that's today. If let's say a pension fund comes, Bayerische Versorgungskammer, Ivanhoe Cambridge, whatever, Tiercraft, Nuveen, if they come and say, hey, we would like to do business with you, they are going to check what our ESG investment policy and whether it ticks all of their boxes, or whether they say we cannot do business with you because this or that is missing. So now here you see, let's say, a high level of what is an ESG-DD. I told you there can be, and we have scoring models, but at the core, what is really, really important are three things. So there's a decarbonization path, yeah, and that path comes from a EU tool. It's called CREM. It's the Carbon Risk Real Estate Monitor. It's open. If you type it in, it's a massive Excel. It takes, even with a good computer, it takes some time to load it down. And if you put in the data, it takes some time to tell you where you stand. And that's, of course, how you would approach it. Yes, you would, let's say, get these guys in, and that's the first 10%, and then you do the windows and whatever, yeah, or you change the heating. So you need a decarbonization plan for your asset. And of course, you check the physical risk. That's a physical risk assessment. You see whether it's close to a river. You see if it's inside, like Frankfurt, whether there are heat bubbles or other stuff. And last but not least, you do the EU taxonomy check, yeah, which checks in how far does it comply with this EU legislation. So thankfully, we're not alone in that. There are a number of initiatives surrounding it, and it's just for you maybe interesting. So PRI, UN PRI, the Principles for Responsible Investing, have had a kind of shadow group to inform EU discussion about what is a right or what is an interesting taxonomy. Yeah, what could work for investors if we define green. Then Pathways to Paris next week. October 6th, maybe you can still write to World Wildlife Fund. We present what we've done there. There's also a nice tool. It's so to say a tool where with little data, you can see where you stand in this decarbonization path that you see and what investments or measures you can take. And then very specific for us, it's the ESG circle of real estate. It's also a scoring model. Yeah, so all of this is laying groundwork. So you can have transparency whether this is a green or brown building, whether it's good to invest here or not. Okay, and then that's then how, for example, a good investment would look like. Why? First of all, this is Neuperlach, I think, in München. It's not the best neighborhood, but we built a school there. So what we did is what we call Nachverdichtung. We didn't take away space because where we built the school, a modular wood structure, there was already a pre-existing garage, and we built it on top. And the building itself, because it's with wood, is, so to say, even carbon positive because there's a lot of wood basically inside the wood structure. And then it's to say how let's say, a good, realistic, this has just been opened up. So how realistically, in a city like Munich, you can build adhering to all of the standards, so to say, and do the right thing. Yeah. And now the next step, so to say, is to get whatever there's these standards, whether it's called BREEAM or LEED or Deutsche Gesellschaft für Nachhaltiges Bauen, DGNB. So, and then you could get a DGNB gold certificate for that, and that's a nice building for you to invest in. But that's of course not the standard all over the industry. Yeah, there's a lot of other buildings. Yeah, so so much my my intervention. To give you a broad idea from where Karl von Karlowitz was 200 years ago and where we in real estate investment and real estate project development are today. There's still a massive long way to go, but I think the good news for everybody involved is the financials. I think the financial side of it should get better because there's a lot of pressure to move towards greener developments, yeah, and to put your money there. So we are happy to take any questions. I think I still got 6 minutes left. I'm looking for my, is that correct? So we got 6 minutes if you like. If not, we can open the door and have some air or something.
Is there a scheme for the ESG? Is there a list of points that you have to follow, or it's up to...
Everybody does its policy, but the policies are normally available. So if you go real estate, if you go Patrizia AG, I'm happy also to exchange cards and send you our policy or give you. So that's normally what you put on your website, because if it's not on the website, some clients might not even talk to you, or in our case, and maybe that's the last interesting point, because I said the times they're changing. So for the first time now, a client came to us saying, I cannot refinance this asset anymore, pretty massive real estate, 100 million of value. I cannot get a refinance because I don't have the stranding point. We need to do the stranding point. The bank wants to see whether it is stranded asset. So let's say the lever that is used, and that comes from the financial supervision, which will basically say, look, Deutsche Bank, we want to know to whom you give your money. And if you give your money to Brown, that only is okay to a certain extent. And that's a very, I know it's very technical, but I think it's very important, because I've seen one of the ladies from the ECB that do the high-level supervision of the banks for systemic banks, the big ones like Deutsche Bank, Goldman, and they say they go for it. Yeah. And so in the end, these banks will not only look at the asset, but they will also look at us and say, hey, where's your ESG investment policy? Can we trust you? Is this a good quality development, or is this some brown shit that you want to sell to us? So yeah, there's no standard for it, but I think we are all getting closer to this, because we all need to fulfill the same regulation. Yeah, okay, cool, thank you.